Hi, it's me testing out Sunday, 12th of December 2010. Uh, I've been flip-flopping with my view recently as really taking the right call between inflation and deflation has been trick. I think till 18,300 Sensex deflation was the primary view, but I've been finding clues that you could actually extend the counter-type bottom for several more years if you could actually go into an inflation cycle. And there are some visible clues which I've been mailing across in terms of the commodity price cycles extending, the CRB index trending higher, and so on. And similarly, some of the currencies which are commodity indicated from higher prices. So it's possible you get that kind of an extension cycle, and it would be true as long as the Sensex is above 17,900. It's a plausible alternative that you need to keep in mind rather than just calling the bear. So a lot of negative noise recently in the markets, but you need to keep your eyes open to this alternative till it is fully ruled out, and that's what I've been trying to do recently, keeping both options open in my alternate counts till we get a clear picture as to what is happening. And till then, the bullish alternate is a good one to stand by because and it would be driven by large caps. Like I said, the relative strength of the mid cap is made a triple top based on where it has been in the last decade, and which means you would get relative strength in large caps versus mid caps, and that would remain the focus area if we get this cycle extension for some time. And if in case there is a bear play out happening, I think we'll get the sense of it by getting more cracks in some of the large caps that are still hanging on. You have the tech sector, which is still not cracked. The auto sector, which I did mention is in its final stages, has some extensions left. At least in individual stocks, we are seeing some extension in telco. Recently, we are seeing Maruti trying to start another move, so maybe some extension in autos. And the banking index on the monthly chart had a missing fifth wave, which despite last week's deeper correction is still really not completely written off because it's still a retracement to the third wave. So since these things are still open, you can't really confidently call that it's end game. A lot of the recent negativity could just be a short-term smoke screen to what's really happening. And you really need to be sure of that before taking the bear call here, now that we are above the 18,000 mark. So I'm keeping a watch on those and keeping the bullish alternatives open without losing sight of the bearish ones, but giving preference to the bullish alternatives till there is proof of an inflationary cycle extending and no negative deflationary events really playing out, as all actions are to deter or postpone potential deflationary factors. So that's what my view is, and that's what I'm trying to be focusing on in my recent updates on various markets. Been trying to show those potential alternatives that could take place in case these things have changed already, and unless something really goes wrong on any front, the short-term negativity would just be noise that would eventually go into the background. So that's all from me this Sunday night, and I should have my regular weekly update tomorrow indicating the key levels to watch for the short and medium term trends. That's all from me. Thanks and bye.